We've got a packed show for you, with all the latest developments from the world of stocks and finance. Let's dive right in. We're seeing some significant movements in the market, with natural gas prices surging as much as 7% due to concerns over supply and demand. This could have a ripple effect on the entire energy sector, so we'll be keeping a close eye on it. In other news, Macy's has posted a surprise third-quarter profit, but its sales guidance is trailing behind last year's numbers. The retailer's stock is down over 7% in pre-market trading, despite raising its financial guidance for the year. This raises questions about the state of the retail industry and whether consumers are starting to pull back on spending. Meanwhile, Marvell Technology is making waves with its plans to acquire Celestial AI, bolstering its ambitions in the artificial intelligence space. The company's stock is up over 10% in pre-market trading, as investors seem to be optimistic about the potential for growth. We're also seeing some movement in the cryptocurrency space, with Bitcoin hitting a 2-week high. However, sentiment remains fragile, and it's unclear whether this recovery will be sustainable. In economic news, the latest ADP employment report shows an unexpected decline in the labor market, with 47,000 jobs gained in October. This could have implications for the Federal Reserve's interest rate decisions, with traders now assigning an 88% chance of a rate cut at the December meeting. As we navigate these complex and often conflicting signals, it's essential to stay informed and adapt to changing circumstances. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and artificial intelligence, where the big players are constantly vying for dominance. Today, we're looking at how Amazon and Alphabet are challenging NVIDIA's grip on the data center GPU market. It seems that both Amazon and Alphabet are developing their own proprietary chips, with Amazon's Trainium and Inferentia, and Google's TPUs, aiming to reduce their reliance on NVIDIA's products. This strategic move could potentially disrupt NVIDIA's revenue mix and predictability, as these tech giants shift towards more cost-effective, vertically integrated AI stacks. Now, let's take a closer look at the implications of this development. With Amazon and Alphabet poised to capture future AI workloads, especially in inferencing, which is surpassing training in scale and economic importance, NVIDIA's current dominance faces significant structural risk. This could lead to a shift in the market dynamics, with the hyperscalers favoring their own proprietary solutions over NVIDIA's offerings. As an investor, it's essential to consider the potential impact of this trend on NVIDIA's stock performance. On the other hand, Amazon and Alphabet's strategic moves could lead to superior returns on invested capital and more sustainable long-term capital expenditure profiles, making them attractive investment opportunities. It's a complex and rapidly evolving landscape, folks, and we'll continue to monitor these developments closely. For now, it's clear that the battle for AI dominance is heating up, and investors should be prepared for potential surprises along the way. Welcome back to the Riskwiser Zone. We're closing out today's show with a fascinating story from the world of tech and finance. Morgan Stanley has made some bold predictions about the future of AI processor growth, and it looks like Broadcom might be the one to watch in 2026. According to their analysis, Broadcom is expected to outpace NVIDIA in AI processor revenue growth next year, thanks in part to supply constraints affecting NVIDIA's products. Now, we know that NVIDIA has been a dominant player in the AI space, but it seems like Broadcom's custom accelerators and high-speed Ethernet networking products are gaining traction with hyperscalers and AI labs. In fact, Morgan Stanley has raised Broadcom's price target to $443, keeping an overweight rating on the stock. But here's the thing, while Broadcom might be poised for growth, we can't ignore the potential risks and challenges in the AI landscape. Supply chain disruptions, regulatory changes, and intense competition are just a few of the factors that could impact these companies' performance. So, what does this mean for investors? Well, it's essential to approach this space with caution and do your due diligence before making any decisions. While some analysts are bullish on Broadcom's prospects, others might be more skeptical. As always, it's crucial to consider multiple perspectives and weigh the potential risks and rewards. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.